Hey everyone, this is Corey Lithberg. I'm the VP of Sales here at Lucena Research, and wanted to make a quick video to highlight our Hedge Finder technology that we have as a module within our flagship analytics platform, QuantDesk. So a lot of investors and fund managers and hedge funds right now are trying to figure out how to mitigate their downside risk and how to preserve their returns due to the recent market volatility. So I wanted to create a quick video to show how you can do that within our platform. So I'm going to go ahead and jump right in. I'm going to click on our hedge module, and we're going to go through a couple of steps here. The portfolio that I'm going to be using is just SPY. So we're going to be looking for a suitable hedge for the SPY. Here are the inputs. A couple of questions you gotta answer. So you have a couple different options here. I'm going to go preserve return as the hedge goal, and then I want to look for a long and short hedge for this for the SPY portfolio, and I want the hedger just to look at S&P 500 constituents for that hedge. And the last question or input you need to have is how many equities you want in the hedge. You have a couple different options. I'm gonna keep it at 5. So what's happening right now? We've built proprietary pattern matching technology that allows users essentially to upload any type of return stream they want, and our models will go and figure out what's the best combination of securities that will derive an inversely correlated return stream to that given portfolio. So novel concept. However, when you think about the amount of data you need to analyze and the different combinations of securities, it's almost endless. So it's really difficult for a human to go through that analysis, but it's a perfect application for machine learning technology like ours. So we have our before portfolio, we have our after. So you can see here what we've recommended or what the system recommended. We have a couple of long positions and a couple of shorts. You scroll down here to the bottom, you have a graph that shows you historically how these portfolios compare to one another, and then we have a projected forecast as well. And on the right hand side you have some KPIs such as you can easily see the improvement in Sharpe, volatility, and so on. So based on this, it looks like we have a solid recommendation from the hedger. So I'm going to save this as a new portfolio, and we'll go I'll run through our next step here, which will, okay, so now that that's saved, I'm going to click on backtest, click on hedge, and we'll walk through the wizard again to get to create our backtest. So we have our portfolio, which is automatically populated. I'm going to go do the last 8 years worth to get a good sample size of data. We'll click next. Now you have the option of optimizing before you hedge, but for this scenario, since we're our core portfolio is only one holding, I'm going to go ahead and skip that portion. Again, we're going to keep the same whitelist, just the S&P. I'm going to rebalance once a month and make sure all this matches again. Preserve return. We want a long short, 5 equities. So we'll go ahead and kick that back test off. So the back test will probably take about a minute and a half. We're looking at 8 years worth of data. So we'll give this a minute to come back, and then we'll look at the results. Okay, we have our results back from the back test. So you'll see a number of different portfolios represented on this graph here. We have our strategy, core portfolio, and the strategy is our core with the hedge, our core portfolio, the hedge, and the S&P 500. And then you have your KPIs and performance metrics over here. So if you look at over the last 8 years, we have in just absolute return percentages, we got about a 14% improvement in returns, which is good. But when you look at Sharpe ratio, we have roughly a 50% improvement in Sharpe, and volatility, we have about a 30% reduction in volatility. So that's all good stuff. One thing I want to point out here too is, when I take away these two lines here, you can see how effective the hedger is at finding a trend line that is almost perfectly anti-correlated with the S&P 500. So it did its job there. Two other things I want to point out before we wrap this up. Having a great back test or having a back test, a successful back test is great. However, in order to really give you some conviction that this strategy is worthwhile or something to seriously consider, you want to see how it does on a roll forward basis in real trading. So you can do that with one click of a button here within QuantDesk. You can click paper trade, and it'll automatically create a portfolio based on this strategy, and it'll trade it in real time on a roll forward basis. So you can again improve conviction prior to either deploying capital or making any changes to your existing portfolio. And one other thing I want to show is the reports that you can generate all out of the box with QuantDesk. So you have some really nice, rich, comprehensive reports that you can do a much deeper dive analysis into the details of the strategy. You see, trailing 12 months, this strategy versus the S&P, 2x improvement. If you look at just 2018, we've been in some really tough times. This year, it's been a tough market for a lot of the hedge funds and managers we work with, and you can see this strategy is up almost 10%. So that's it's done great with these more volatile markets. So that's it. That's everything I wanted to show you. If you have any questions, please feel free to reach out to me. I'm happy to help where I can. My email is Corey, Corey at lucenaresearch.com. So please let us know how we can be of service, how we can help. Happy to chat. Thanks for watching, and have a great day.